Hey, what's up guys? So welcome back to the channel. Joseph Fountain here. So today I want to talk to you guys about Acorns, and when you're investing your money using the Acorn app, where is your money actually going? What funds are you actually putting your money into? So today I want to break that down, and just so you can see exactly where your money goes and how that works.
Hey, so here we are guys. We're actually on the Acorns website. So this is information that you can actually get from their website. So check this out. We're going to be talking about investing. So guess what? I got to give this disclaimer so don't nobody get mad at me. So basically, make sure you do your own research. Anything that I'm talking about, it's just opinions of my own. I am no shape or form promoting, these things as, oh, you should buy it. There's my disclaimer. Bam. So let's get right back to it. So with Acorns, you can invest into 5 different portfolios, or ETFs, if you will. And so those are, you have your conservative, you have your moderately conservative, then you have your moderate, which is like in the middle, then you have your moderately aggressive, and then you have your aggressive portfolio. Now with that, they have different funds, and these are the only funds that are attached to their platform. And so you can see here, these funds are actually listed, and you have large company, which is large company stocks, small company stocks, your developed markets, your emerging markets, real estate, corporate bonds, and your government bonds.
So real quick, now Acorn uses bonds. Now, if you know what a bond is, then you can skip forward about a minute. If you don't know what a bond is, let me kind of give it to you in a simple term. A bond is when you basically loan money to the bank or an entity, or whatever the entity or whatever it is that the bond is for. And basically you loan them money and they pay you back the money, but they pay it back to you with a little interest on it. Now, a bond is something that a lot of people invest in. It's a very conservative type of investment. It's not an extremely aggressive investment, but it's very conservative to where your money will make some type of money through time. The interest is normally not, that high, but you can get a return on your investment by investing in bonds.
So here you can see where these are the only funds in the ETFs that they invest in. So if you go to their website, you can actually click on these things yourself. But we're going to take a look into each ETF that they have. Now these ETFs are actually ETFs that you can invest in outside of Acorns. But what they do is they make it easy for you to invest in them, because you can invest in Acorns. You can invest, change. You can invest $5, but if you were to try to invest in these, like if it's not a company like maybe Stash, or a company that houses these, where they allow you to put in a small amount of money, you'll have to pay for the actual price, like the share price for these particular ETFs. So here we go. The first one is large company, which the ticker symbol is VOO, and so this is a Vanguard account. So let's take a look at it. All right, so here we go. We're here at Vanguard S&P 500, and this is your large company stocks. It gives you an overview. You can get the price performance, the portfolio and management, the fees, distribution, the news and reviews and things of that nature. And you can see on the overview, it gives you some information about it, shows you how it's been, how long they've had it, the money and things that's been put in. It also gives you, their 10 largest holdings at the end of, normally it's like the month or two before when you're looking at it. Or they may do it quarterly to kind of show you what the largest assets are they're holding. So you can see here their top 10 largest assets are Microsoft, Apple, Google, Amazon, Berkshire Hathaway, Facebook, Johnson & Johnson, JP Morgan, Exxon, and Bank of America. Now, if you want to see, all of the things they're holding, you could go here and click portfolio holdings. So if you're investing into Acorns and you're putting money into the portfolios, and large company stocks is one of the ETFs within the portfolio, this is where your money is going. And so you can see here for stocks, they have over 500 stocks. It's a lot of stocks. And you can see the stocks here. You can keep going to see all that they have by clicking next. But it shows you what they have. It shows you the market value, how many shares they have of these particular stocks. And so you can get all that information here. They're investing in 500 stocks. Then they show you also the bonds that they have, which you can see they have United States Treasury bills, where they have those bonds, and then they have a short-term first, and all this information and stuff that you can also look up. But yeah, so that shows you that portfolio and what they're invested in. And they're invested in large company stocks. So these are typically some of the larger companies that you are familiar with. As you can see here, we click over the next page. You got Netflix, McDonald's, Walmart, Abbott Laboratories, Philip Morris, Oracle, Adobe, and so forth and so forth. And like I said, you can just click through. And if you want to see all 500, you could definitely do that. So that's what the large company stocks portfolio is made out of. It has 500 stocks in it. All right. And you can see it says S&P 500. So they have 509. So a little bit over 500. All right. So let's check out the next one. The next one is small company, which is also another Vanguard. And just as similar as the page before, where you could go and you could search and see what it is they offer. Same thing here. You can go here and do the same thing. And so you can even see where it says risk potential, more risk, more reward, less risk, less reward, things like that. And so you can scroll down as we did before. You can see their top 10 assets that they're holding right now. Now this is small company stocks, so some of these you've probably never ever heard of. You probably don't know anything about it. Now Burlington Stores, I think we know about that, right? But what you could do is you could now take some of these stocks. It's also a good way to research too. You actually take some of these names and go over to Google and actually see what they're about. Let's do that for example. So WP Carey Inc., right? So let's copy that. Let's see what comes up. All right, this is the home page of it, right? WP Carey. This is a small company investing for the long run. It's one of today's largest net lease REITs. Now, if you don't know what REITs is, it's a real estate investment. And so basically they have like different things within the portfolio of real estate. So it'll house different things. And so you can see here what it's about. Our diversified portfolio of high quality, operationally critical commercial real estate is leased on a long-term basis to credit-worthy tenants primarily in the U.S. and the Northern and Western Europe. That's a pretty nice description. That's an interesting description. But here you can just see like what the company is. All I'm just showing you is, for example, is you can actually take these things, you don't know what they are, and you can just Google them and see what it's about. So the portfolio holdings, let's see what they have there. Stocks, they have 1,300 stocks, almost 1,400 stocks. So it's a small cap. There's a lot of small companies, and they got money, and probably most of them. Like I said, see, you can scroll up and down, and you can see you see Etsy on there. Y'all know Etsy, right? So you can see what they have there, and as if you want, you can click over and check it out. But that's also a good way to also find different stocks and start to research and things like that. Their bonds here, they're only holding one bond. You can their short-term reverse, same to the large cap stocks. It's Vanguard, kind of their structure for that. So that is a small cap. So developed markets. All right. So here, developed markets, it's like basically places that are like, when you hear about developed markets, meaning things that are already doing well, versus emerging markets, which is the next one, which is like things that are coming into. So developed markets meaning it's developed. So here you can actually see what they have here, and it has the top 10 as before. And as always, you can go check out portfolio holdings. Anytime you invest in any type of ETFs and things like that, you can always pull it up and see exactly everything that's there. They have 3,900 holdings within the portfolio, and this is what ETFs are like. This is what ETFs are. They hold a lot of different stocks, and depending on the sector, it can be just particular that sector. Like if it was food, or it was banks, or social media, it'd be a bunch of social media stocks or whatever. So here, like I said, Lots of different things they have there that you can actually go in, take a look and see. So developed markets, I'm sure it just does not mean companies that are within the US, but it means companies abroad that are in developed markets. As you can see, some of them, the Royal Dutch Shell and BP, which stands for British Petroleum, Royal Dutch Bank of Canada, Toronto Dominion Bank. So your money will be going into these things, and you will have a very small piece of the pie that you're, just from the money that you're investing into it. The next one is emerging markets, which I said that's kind of the not the opposite of developed markets, but kind of like the opposite. It's not undeveloped, but it's coming along. So and here you can see, and their market prices are right here, so you can see how much they are per share. So if you put in $5 into Acorn, or you put $20 or whatnot, that money is going to be broken down into those portfolios where you will own a piece of it. So it gives you a chance to invest if you don't have all the money. Invest fractionally just through funds. And here you can see emerging markets. You can see their top 10 real quick, their portfolio holdings. They have close to 4,700 holdings, and you can see they're very diversified, these portfolios. And you can see here what they have. You see a lot of China stuff, China construction, Taiwan, and Baidu. You see Bank of China. You see how do you pronounce that? Sberbank of Russia. Sorry, don't know how to pronounce it. You can see Tata Consultancy. And so you can see here Petrolia, and this is actually in Brazil. This is actually a company that I used to be invested in for a while. But you can see it's in different areas there, and you can kind of see the portfolio. So that's pretty cool. And all I'm showing you is stuff that you can do, at your own leisure. We're not gonna go through. We can't go through all their holdings. It's impossible. You can see they have, thousands upon thousands of holdings. So, and here, so you have the Vanguard real estate. So if you put money into Acorn, you're also going to be investing in real estate. And here it shows their holdings, and they're actually holding another fund, a real estate fund within the real estate fund. So cool. So you would think that everything that this is within this, it has to do with real estate in one shape or form. So there's 189 holdings, is a more specific fund. All right. And like I said before, you can always go check out and see what they're holding. So they're holding probably not just construction companies, but things that has anything to do with real estate / construction, residential, commercial. It's more than likely within this particular ETF. So then you have your corporate bonds, like like I explained you like what bonds are, right? And pretty much in all these funds, they hold some type of bonds, because it's almost like they're guaranteeing some type of return. Now here, this is through iShares, which is by BlackRock. So this is not a Vanguard one, but here you can also see similar setup, and you can see there, you can see what they've been doing and how things have been growing. And here you can actually go to check out information is the same. You want to click on portfolio, and you would see their holdings, their top 10 holdings, top issuers, and then you can go to all, in which they would give you all of their holdings here. And so you can search through. There's close to 2,000 holdings down here that you can search through, and this is in within their bond holdings and things like that. So you can go through and check this stuff out yourself. But and it also gives you a sector breakdown too, so you can see they're heavily in banking. So yep, that is the corporate bonds. And then the last one is government bonds, which most people have heard of, just regular government bonds. This is also through BlackRock, and similar situation. You can go, and if you want to see what they have, they're holding, you can go here and check it out. You can see different things that they have. That is actually the spreadsheet that you could pull up. I'm not going to pull that up, but you could always just click, and you can see it says United States Treasury, 99.98%. So that is that is their top issuer, and their top 10. You'll just see a bunch of Treasury notes. That's there. Clicking all, you're going to see pretty much the same. A bunch of Treasury notes, there. So this is their Treasury bonds. So it's self-explanatory, guys. They're the government bonds, excuse me. But it's self-explanatory. So if you want to see where your money is going into Acorns, then you can definitely, just click on the site, and you can go underneath up here at the top. It says support, investments and withdrawals. Then go to where is my money being invested, and you can get more of that money. And then if you have the app, you can easily click in the app and get an explanation to see the percentage that they have that are within these apps. So with conservatives, you'll see they have 12% of the large company stocks. You'll see, like we talked about with bonds, it's normally a simple return. So it's kind of like a guaranteed return, because you're loaning, you kind of give your money towards a loan that's going towards a particular company, to the government, whatever, and they're giving you money back with a small amount of interest on it. So you can see in a conservative, they actually have most of their money in the corporate bonds. You go over to moderately conservative, and then you can see that it starts to shift a little bit, because it's conservative, but just a little conservative. And as you continue to scroll, you'll see that it starts to change and adjust. It starts to allocate differently. So there's more money being put into large company stocks here in moderate. You go to moderately aggressive, you start to see that a lot of the money starts to shift away from the bond sector, because remember, bonds are a conservative way of investing. They give you a return, but they give you it's not like it's going to be like this massive growth return. Now through time it can be, and the more money you put into it, the more money you can get back, but it's not an aggressively growing or large swinging facet. And so when you get to all the way to aggressive, you'll see that you don't even see bonds on the screen. Now granted, within each of these funds, they have bonds built into it, which is just a smart thing to do. But you can see here, most of your money is in large company stocks. And then they have international large company stocks.
So hey, if this video has been helpful, please like, and don't forget to subscribe to the channel, and I will see you guys on the next video. Peace.